Welcome to the Rick Helps Real Estate Show, our weekly Sunday evening edition where we just kind of recap what was going on through the week. A relatively busy week when it came to data. We got a jobs report, we got a CPI report, inflation. And the inflation report was kind of positive. In other words, showing that we are heading down towards the 2% target. Normally, you would see a big reaction in the bond market. We saw a little bit tempered here. We're at 6.04 with a 30-year fixed rate. Went down a tad bit, but not much. And we can expect to kind of hang in there for a while. Here's where it looks like on the chart. Just went down and increased slightly by minimal. So it's basically showing ho-hum. There was the jobs report came in. The bond market didn't react to that at all. So there's a lot of chatter about whether or not the central bank is going to lower the rates. That chatter is going to be there now. What in November, and I talked about a lot more even in December, saying, look, don't expect much in January and February this year, just like I told you last year, because there really isn't a whole lot that's changed. There isn't a whole lot that's changed in the way the numbers are rolling up and the way our trends are. And our trends remain seasonal. In other words, it doesn't take a rocket scientist to say, we're going to see more listings. Well, yeah, it's January. We're going to see more listings. We always do in January. I'll show you here on this chart. They come flying up, and they have. They're up higher than last year, 22,753 compared to 24,875. So they're higher. But because the contracts have not followed them, we're seeing a lot of red here in the CMI, the Cromford Market Index. This means that you've got, it's leaning towards more of a buyer's market than it is a seller's market. These don't tend to turn green until that gap closes. In other words, you got new contracts, new listings coming on, new contracts falling off, or new contracts getting closer. That gap closes, then you're going to start seeing more green. In the meantime, it's pretty tight, and it's there's a gap there, and the gap is enough to where I can safely say that we're going to see some downward pressure on pricing. So far in most of the markets, I don't see any downward pressure that is what I would call desperation. Although you can see in the CMI report down here that cities like Buckeye and Maricopa, people that have to sell down there are going to have a very, very tough time. But Chandler's fine, Fountain Hills, Gilbert, Phoenix, Cave Creek, no pressure. Just price accordingly. Remember, there's no such thing as a market. I priced my house at the market. Okay, I'm happy for you. You don't know what the market is until you actually list the house. And then the buyers will tell you what the market is, what they're willing to pay. So, I see more and more realtors or more and more people have listed their houses. My realtor told me it was priced at the market. Yeah, that was last month's sale. We're coming down. So you have to be flexible. You have to pick a price that's within a range. This next chart I got is pre-pandemic, and it is contract ratio heat map. It's all color coded. Basically, these numbers here are showing cold, balanced, cold. Fountain Hills showing active, balanced, warm. Down here at Mesa was showing hotter. And then just above there in 85201, it was showing hot. Those are the colors. Now, that was 2019 before the wheels fell off the wagon. Let's go to today. Where are we today? See if we can find where we're at. February 7th, 2026. All we see now today is a spinning little wheel there. Basically, balanced and warm. Balanced, balanced, balanced. Few places that are cold. There's a balanced warm one there. Gilbert there is hanging in hot in that one zip code, as is 85024 hanging in hot. Everybody else from balanced to cold. We're right there at 2019 levels. Not a big definitive difference. If I were to go to 2021 and show you this chart, they're all frantic, hot. The market's going nuts. And it's a good visual snapshot to show you what's going on in our market. I'm zipping my head back and forth here, figuring out what I'm going to show you next. Here is a little market dashboard that shows our active listings. And active listings for our market, which is the Phoenix metro area and surrounding area, not just Phoenix metro, all of Maricopa County and part of Pinal. And it's showing that active listings are in the yellow zone for the monthly change, kind of balanced. Same with annual change. In the red, they're down about 12%. Annual change down 10.8, but you can see that the listings have gone up, and that's why those graphs reflect that. Now, if you want an individual report for your zip code, click that QR code up above or the description down below, and I can get you more detail for your zip code and get that right out to you. The Cromford Index right here, you can see it's continuing to slide. This is a forward-looking indicator that's going to tell you that February is not going to get any better, and I'm sorry, it doesn't look like March is going to get any better anytime soon either, that we're going to be pretty slow going forward. If we look at expired listings, there's not a whole lot going on there. They're kind of staying in the same zone. You just don't see a lot of expired listings in January and February. Same with canceled. List price per square foot, kind of staying a little bit flatlined. They're not going crazy. They're sitting there at 97.1%. And then we take a look at closed listings. These are all going to come from last month. And we're seeing that those are mostly in the green. So we're up just a hair with regards to those. Days on market, it's that's getting messy now. Let's take a look at it. And the reason I say it's getting messy is they're allowing us to put our coming soon on, and it starts the clock ticking right away. So you may have coming soon for 2 weeks, and it adds to your days on market. It's not telling us a lot. So it's not a forward-leaning indicator. It's a lagging indicator. And here's the success rate. The success rate says that 69.2% of the people listed got a contract for their house. Historically, we run at 69.2. So now you have to get your home down to that price where somebody bites to show up on that gauge. Percent of closing costs is still hanging in the 50% range, folks, and it's still averaging about 10,000. Even though I say averaging 10,000, you click on that goes anywhere from, let's see if it's going to show me here. To get an average of 10, it's going to show you seller paid concessions. Let's see, total closings. It's not showing me on this chart. Anyway, it's all over the map. Sorry, I'm drifted around a lot today. Annual appreciation based on annual average price per square foot. Our annual appreciation right now is minus 1.1 versus last year. We were in red, which is 2025. We were up 4.1. Is that up or down? We were up 4.1. And forgive me, here we're up 1.1. So we are not in the red in our total market. But as I look at the numbers and I look at the data, I don't see anything that's sliding in that's going to change anything that's going to change the dynamics of this market. If you're out there looking, you know that you have time to look. Somebody made a comment the other day. They said, "Oh, I see you're off the bandwagon now." In other words, I guess people thought I was really bullish on the market. Now I'm bearish. Go back and look at a lot of my videos. I've kind of told you where I thought we were and where we're going to end up for the quarter, but I have never said, here's the way next year's going to go. It's going to be great. Get out there and buy. It all depends on you. If this is the time that you want to buy, can you find a house? Yes, you can. Do you have time to look for it? Yes, you can. You may find one that really fits your needs, and the next day it's under contract. It's all over the map. Stay close to your realtor and stay on top of the market. At least you're not having to write a contract in the driveway. Those were rough times. I hated that. So that's your market update for the week. I hope everybody had a great weekend. Until then, I will see you next week. Take care.